US indices were volatile last week, with the markets remaining cautious ahead of the inflation print in the United States. Market sentiment was negative as economic uncertainty and higher expectations of inflation were fueled by appreciating energy commodities last week. Commodities were mixed, with energy outperforming the metals, as fears of higher inflation lead speculators to expect a possibly hawkish interest rate stance from the US Federal Reserve. The price of indices started the week positively, with optimism around Apple's new iPhone release in focus. However, after an underwhelming product release and with inflation in focus, indices traded cautiously, erasing returns achieved earlier in the week. Both indices and commodities prices could see a volatile trading week, as the inflation print could cause a wave of repricing of these two instruments. Meta prices continue to experience positive price action, as the company received positive coverage from Morgan Stanley. The investment bank outlined Meta's potential and forecasted the company could earn as much as $20 per share in 2024, roughly doubling its reported earnings per share in 2022. Meta will be hosting its MetaConnect event on the 27th of September, where it will release its latest virtual reality headset, while also covering its AI development. Should the company have a successful product release, sentiment toward the company could improve. With the company set to go public on the 14th of September, the hotly anticipated initial public offering has created a lot of hype around the company. The chip designer holds a strong market position, with 99% of all smartphones containing an ARM chip within them. According to Bloomberg, the stock is so popular that the company opted to close its order book a day earlier than anticipated, after strong demand saw institutional investors buy all of the shares on offer prior to the public offering. Given the positive coverage by the investment banks and the mainstream hype, ARM could see positive sentiment and strong volatility in its first few days of trading. Crude oil prices continue to rise, with prices their highest levels since November 2022. Crude oil continues to experience price appreciation, with the commodity trading at levels about 20% higher than at the beginning of this year. According to 9 Point Partners, a fund with a strong focus on crude oil trading and $8B in assets under management, global crude oil inventories are at their lowest levels since 2019 and are forecast to continue falling. The falling inventories, coupled with production cuts stated by Saudi Arabia last week, could continue to facilitate crude oil's positive price momentum. According to investment bank UBS, oil prices could hit $95 a barrel in 2023. Gold prices continue to remain under pressure as the US dollar remained elevated. Despite dovish expectations of Federal Reserve policy, traders still remain cautious about gold due to inflation expectations remaining uncertain. However, the decline in gold prices may only be temporary, as investment bank Macquarie issued a price target on gold of $2,100 an ounce by Q2 2024. Gasoline prices have been underwhelming recently, given how elevated crude oil has been. Despite the slow movement, gasoline supplies continue to remain tight, with current gasoline ending stocks at their lowest levels since November 2022. With the crude oil production set to continue declining as confirmed by Saudi Arabia last week, gasoline supplies could continue declining, which could affect the commodity price. The Euro-USD pair has seen negative pressure over the past couple of weeks, as the US dollar unexpectedly continued to rise. However, with markets forecast dollar weakness due to Fed dovishness, a reversal may be possible. Furthermore, the European Central Bank is set to raise interest rates another 25 basis points and remain hawkish with their approach, which could be positive for the currency.